All right, let's talk about it. We are in the middle of an absolute explosion in artificial intelligence. I mean, the money is flowing, the headlines are everywhere, and if you're a serious investor, you have to be asking yourself the big question. Is this a real, once-in-a-generation shot to build wealth? Or are we all just watching a giant high-tech bubble inflate, just waiting to pop? Because, this feeling of tension in the air, it's kind of familiar. For anyone who remembers the late 90s, this whole thing has a definite echo of that dot-com mania. The crazy valuations, the endless optimism, and then this, the brutal crash that just vaporized fortunes. It's like the ghost at the feast of this AI boom.
And you can see the parallels pretty easily. Back in the dot-com era, it was all about the garage startup, right? It was defined by easy money, a super low barrier to entry. If you had a good idea and a half-decent website, you could probably get funded. Today's AI gold rush? Well, that feels more like an industrial-scale arms race. You've got companies throwing absolutely staggering amounts of cash at the wall just to stay in the game. So that's really the multi-trillion-dollar question we've got to answer. Is this just history repeating itself, or are the fundamentals of this revolution completely, totally different? And here is maybe the single biggest difference. The barrier to entry to play in the big leagues of AI is just immense. We're talking about billions of dollars. Billions. Spent every single year by the top players on just the basic infrastructure, the chips, the servers, the raw computing power. You just can't do that from a garage. This isn't just hype, it's heavy industry. So, okay, if we accept that AI really is this massive, tangible shift, how do we invest in it without getting burned? We need a clear framework. We need an investor's playbook for this brand new era. All right, strategy number one is a classic. It's called the picks and shovels play. Think about it. During the big gold rushes, the surest way to get rich wasn't actually finding gold. It was selling the picks, the shovels, and the blue jeans to all the hopeful prospectors. Well, in the AI gold rush, the exact same logic applies. So who are these companies? They're the ones making the essential tools for everybody else. We're talking about those highly specialized semiconductor firms designing the GPUs, which are basically the engines of AI, and the massive cloud computing providers that rent out all that processing power. Their revenue is practically guaranteed, no matter which AI app actually wins the race in the end. Now let's move on to the second strategy, and this one's a bit more complex, the Moat Builders. Now, these aren't just AI companies. They are established businesses in totally different sectors that are using AI to build a massive, unbreachable competitive advantage, a moat around their core business that competitors just can't get across. So what are they building this moat with? It's not just some clever algorithm. They're building it with data, huge proprietary data sets. That means data that only they can get their hands on, like every single purchase you've ever made on an e-commerce site. In the world of AI, that data is the raw fuel for the entire machine. It really is the new oil. And this is exactly how that moat just gets wider and wider over time. It's this powerful self-reinforcing cycle. Step 1, a company collects its unique data. Step 2, it uses AI to make its product or service better. Step 3, that better product pulls in more users. And step 4, those new users generate even more unique data, which feeds right back into step 1. It's a flywheel that makes it almost impossible for newcomers to ever catch up. Okay, so we've got a playbook for what to look for, but it's just as important to know what to avoid. How do we spot the companies that are just all hype, the ones that are destined to pop, and separate them from the ones creating real, sustainable value? This chart is basically your cheat sheet. Look at the left column.
That's a winner. They have a real business model for actually making money with AI, their key asset is data no one else has, and they're focused on a proven customer base that actually pays them. Now, look to the right. That's a bubble. The valuation is driven by pure hype, its main asset is a slick PowerPoint deck, and the whole story is built on potential, not profit.
And please remember this, because it might be the single most important warning of all. If a company has a broken business model to begin with, just slapping the letters A and I on it is not going to save it. In fact, it's worse. The incredible expense of AI will just make that company burn through its cash that much faster.
So, what does this all boil down to for us? It means navigating this AI arms race isn't about giving into fear or FOMO. It's about having a disciplined, focused conviction.
Look, the goal here isn't to chase every single startup with AI and its pitch deck. That is a recipe for disaster. The goal is to carefully, meticulously identify and invest in the companies that are providing that crucial infrastructure, the picks and shovels, and the businesses that are building genuine, defensible moats with the technology. So I'll just leave you with this question. As this gold rush really gets going and billions more are poured in, the challenge for all of us is to figure out who is actually striking gold and who is just selling a very convincing map to an empty mine.